All right, what's going on, guys? Tremaine here, going long inside of this 1 minute fair value gap, stop loss beneath consequent encroachment of this wick, that midpoint. Want my stop just beneath that. And looking at this buy size, sitting at around, what is that, 22,100 or so. That's my draw for this morning. If you go to your 5-minute chart, we're currently trading inside this 5-minute fair value gap. It also has a volume imbalance inside of that. Okay, that small little separation there, you have to include that when drawing your fair value gap. So if you split that range in half, that 5-minute BISI, there's your midpoint, dropping down to the 1-minute chart. In the upper half of that 5-minute fair value gap, we had this inefficiency here. So I'm using that as my entry. Not expecting midpoint of this wick to be traded past because that is resting in the lower half of that 5-minute inefficiency. Okay, if we're bullish, we want to see the lower half of PD arrays not be traded to. So expecting higher prices, looking for an immediate reaction. We just traded to midpoint of that fair value gap and touching this wick. And I'm going to run some standard deviations for potentially partials. I may just do one full pool depending on how the trade's panning out. I am on my live account, by the way. This was kind of just an easy bread and butter kind of day. It's a little too easy to pass up here. So I may just hold for 1,500, or maybe I'll close at 1,000 and leave a small partial on. I'll just see how we trade above this short-term high. If we get a lot of speed, a lot of energy, if we form fair value gaps that are staying open, then I'll be more confident and just holding for one full pool, that target up there. All right, and from this low to this high, projecting that higher, -2 standard deviation. That's a great area to scale out some. I may or may not do that. So we're going to go ahead and mark that out and label that -2. Whoops, if I can type here, standard deviation. All right, go ahead, clear that off now. And then again, this is your 5-minute inefficiency. And it's consequent encroachment. And I'm basing my entry off of this 1-minute fair value gap, resting in the upper half of that. I just got back home. I'm out doing some Valentine's Day shopping for the lady, and I thought, what better way to come home and unwind other than just recoup what I just spent in the mall. So we're gonna let this pan out. The 3 p.m. macro is also underway. So 250 to 310 is your macro. Okay, one of the macros for the PM session. And we're about 5 minutes from the start of that, so I'll be expecting the market to start spooling. Until then, let's go ahead and annotate some of this 5-minute BISI. Put that at the top. And then we'll 1 minute. There we go. Something like that, right? Risk comes off in this trade should we take out the high here. If you sort through your time frames, we're trading into a 5-minute fair value gap here, 4-minute inefficiency, 3-minute. On a 3-minute chart, this lower fair value gap will be treated as a breakaway gap. You want to see that stay open. 2-minute chart, fair value gap, and then the 1 minute here. Faded gray line here, that's a new week opening gap. Now we have event horizon. Okay, midpoint between two new week or new day opening gaps is your event horizon. So if you take the low of this new week opening gap and take the high of this one here, midpoint, there's your event horizon. So we're dropping down trading into that beautifully, and then you want to see a reaction off of that. Trade up, this candle opens, trades down, midpoint, consequent encroachment of that wick, and then you're watching, do we get feedback off of that? And notice how price is not interested, as of right now at least, in trading to the lower half of that 5-minute inefficiency. Even this 1-minute fair value gap here, notice the bodies. Do we ever close past midpoint of this 1-minute fair value gap? Nope. The wicks trade past it, that's fine. The wicks do the damage, but the bodies here are telling you the story. Okay. So let's go ahead and label the event horizon. Again, it's just a rough estimate. Trying to pinpoint more or less. We'll call it right there. So 22,034.75. About right there. And we'll make that a little gray. And that is your event horizon. Oh my goodness. If I can spell today, my goodness. Again, risk comes off above this high. Want to see a lot of speed through that. So risking about a little less than 350 on this trade. I might just go for 1,000 and leave a runner. I've already made my $1,000 for the week, but this was just too obvious to draw on liquidity. The price action we've been getting on the daily chart hasn't been the cleanest, but today we're finally leaving that nasty daily kind of mess. So still risking light, but giving myself the opportunity to really finish the week on a high note. As you can see, we have a fair value gap there, coupled with a bullish order block. Beautiful feedback. I'm real picky when it comes to my colors and whatnot, so it's just something we're going to have to deal with. All right. I like that feedback right there. That's nice. And I think I am going to go for 1,000. And I'm going to leave a small runner on. So I'll just take off, let's just call it 13 contracts. I'm just going to leave 2 micros on all the way up there. I'm not trying to get cute today. I've already made my weekly objective. There's no reason to try to get fancy and whatnot. This is really just extra Valentine's Day money. Nice little pop there. Risk is coming off. Screenshot that. Send it to the Discord and whatnot. Save it for my personal journal study. I'm actually not going to move my stop to break even just yet. I want to see us displace a little bit more, but I will trail my stop underneath this swing low, which comes in at 43.50. 43. Oh, that is about break even. Okay. There we go. Very nice. Again, don't mind me. This is just stuff that kind of I just like to adjust. It needs to be perfect. I don't think I have OCD or anything like that, but when it comes to my chart staying clean and looking pretty, I'm very mindful of how I want the presentation to look. Feedback looking good. I like everything we're seeing here. This is really, really textbook delivery. Again, some days it's just too clean, it's too easy to pass up. Like I said, yes, I made my weekly objective for the week, but this was just this is bread and butter salad days. This is when I perform at my best. Low resistance liquidity runs. It really doesn't get any better than this here. So we're in that 3 p.m. macro, 250 to 310. This fair value gap here, treating that as a breakaway gap / measuring gap. Again, taking really like 90% or whatever my position off at -2 standard deviation, $1,000, and I'm content. The last 2 micros up there for the buy side is really just the chef's kiss cherry on top, but bulk of my positions coming off within the next 5 handles. Make sure to join the Discord if you're not in there already. Shameless plug. This Saturday, the lifetime sale is ending. Okay, lifetime access to the Discord, one-time payment, and you're in there for life. That offer is off the table this Saturday, February 18th at midnight. So click the link in the description for more information on that, or check my community tab here on YouTube. It's a steal. It's a steal. Normally, I charge $300 for 1 year of Discord access, and I'm giving you lifetime access for $250 for less the price of 1 year. So check that out. We already have a lot of people in there, and it's going to be a lot of fun. It's going to be a party up in there. I'm watching this fair value gap here. And just like every inefficiency, when we're bullish, we're watching midpoint. And we're watching how the bodies close. Do we respect the upper half of that fair value gap? And we're treating this here as a breakaway gap. Really beautiful entry, beautiful delivery. This is the kind of price action I'm expecting in the spring months as we head into March, April, a little bit of May. The live streams are going to be real fun if we can get price action like this in the morning session. This is the definition of a low resistance market. So mentorship students, that lecture video we just went over as far as the daily chart and the high resistance condition, this is what low resistance looks like. Okay, notice the speed above highs, fair value gap staying open. Okay, all those low resistance signatures. These right here, this is the condition that you want to trade in. Notice how easy, how fluid, how stress-free. It's just get in and you just let it run, and it doesn't give you any hassle. It gives you all the feedback, the positive feedback that you're looking for. That's what you want in a trade. You want to trade in low resistance. So even though, like I say, even though I already met my weekly objective, these signatures, this is where I perform the best. This is my bread and butter. This is, okay, whenever we have a market condition like this, I want to be in there and take advantage of that opportunity. Right, seeing a little bit of retracement, that's fine. You always zoom out in the higher time frame. This candle closes in 3 minutes and we may leave a fair value gap. And this is when I cycle through the time frame. So do we have a fair value gap here on the 5 minute yet? Nope, not quite. Let's go to a 4 minute. There it is, right there. So you don't panic on a 1 minute chart seeing this drop down, and you don't get to panicking and playing with your limit orders and your stop loss and whatnot. Cycle through the time frames. What is it retracing into? There's nothing here on the 5-minute chart yet. This candle hasn't closed. But if you go to a 4-minute chart, there's your fair value gap. And because this fair value gap is on a 4-minute chart, this is parent, meaning this fair value gap has more weight, has more importance than this fair value gap here. Okay. Higher time frame inefficiencies are parent, stronger, more important than a 1-minute inefficiency here. So I'm not panicked. I'm not freaking out because we've completely overlapped this. I'm understanding that this here has more importance and is midpoint. Okay. Price continuum theory, ICT teaches that a lot. And you would expect the lower half of this to stay open, preferably see it stay unfilled. Why do I say that? It's resting at about midpoint of that 4-minute inefficiency. So would you want to see a full repricing? Probably not. Would you want to see price come down to the new week opening gap? Probably not. What do you want to see? Preferably, you want to see it stay open, because anything in the lower half of that 4-minute fair value gap, you don't want to see that traded to. Okay. So let's go ahead and highlight that with the understanding now that it is resting at about midpoint of that 4-minute fair value gap. I'm going to lock in a little bit of commissions here. Right now my stop is at negative $12. Go ahead and I'm confident that my stop's not going to get hit, but you know, crazier things have happened. Locking that in. Cost of doing business is not free. Trend down to midpoint. Now that right there, that's not what I wanted to see, but that new week opening gap is the area of fair value. That's fine. Ideally, you want to see the lower half of this stay open. So if there's ever a time where I'm saying, okay, I want to see speed in my trades, it's right now. This candle or the next one needs to be energetic, fast to the upside, because this right here, preferably, I would not like to see us trade down here. But the fact that we are, it needs to get on the giddy up, work higher. These highs up here, too smooth. If you go to like your 5-second chart, 15-second chart, that's way too clean. Okay, that's like a quadruple top on a sub 1-minute chart. So looking at that as minor buy side, and obviously your -2 standard deviation, which is where bulk of my position will come off. So I'm watching this candle or the next one. Do we get speed, a willingness for price to really get out of this? Because we're in the lower half of fair value gaps. That's not what we want to see if we're bullish. So do we get on the giddy up? Do we show a willingness to say, okay, we're not supposed to be spending time down here. Let's go. And that's what I'm looking for. So all these SIBIs in here, I'm not even looking at it. This fair value gap, I'm not looking at that as a premium array. This fair value gap, not worried about it. I'm expecting us to get above it. Use this as support. Get above this, use it as support. I'm not looking at any of that to take us lower. Our focus is up here. Screenshot, send this to the Discord group so they know what I'm looking at. Let them know that the new week opening gap is my last line of defense for higher prices. It's been a good trading week. We have a nice 3-day weekend coming up with a bank holiday on Monday, so always looking forward to that. An extended weekend. Tuesday would be our public tape reading stream that everybody could tune in on Tuesday morning. Glad to have the YouTube community, all my subscribers here, all my supporters. Hopefully y'all tune into that. It's going to be a lot of fun. And I'm sure I'll feel well rested and rejuvenated. We could all use a 3-day weekend. All right, so we're above this SIBI, which is what we want. Now, I'm looking for two things. Either one, we don't trade to it at all and we just leave, or two, we do that right there and show immediate feedback wanting to go higher, because we're not treating this as a premium array to take us lower. We're focusing on the buy side, resting at around 22,100. So without trying to make my charts too clustered, we'll just go ahead and switch this then. We'll make it easier on ourselves and do this. Inversion fair value gap. Where's the buy side? Here, yes, but minor buy side here. Too clean. I don't have access to a second chart, but I don't need that to see that this is just way too smooth. So let's take off this -2 standard deviation and let's outline the minor buy side. That right there, too clean. Deeper retracement than what I would have liked, yes. Prefer not to see this completely traded through, but new week opening gap, it's no big deal. That's why you're never in a rush to trail your stop. Inversion fair value gap, does it send us lower? Or, sorry, does the SIBI send us lower? Nope. We don't want to see that. We're in a buy program. We want to get above it and see it be used as support. Now, what PD rays do we have in here? SIBI, same thing. You would want us to get above that, treat it as support. This fair value gap, we failed to use it as support here, traded through it. Now, if we were to get back above this buy side imbalance, sell side inefficiency here, you would treat that as a reclaimed bullish fair value gap, meaning you're reclaiming it later in the future. It wasn't used as support here, but we came back down, traded to the fair value gap, new week opening gap. Now, if we were to get back above it, trade down to it, you would expect for it to use its, you would expect for it to act as a normal fair value gap and resume its normal function of being used as support. Word salad right there, kind of getting myself tripped up. I'm watching this wick on this down close candle. Back down to the inversion fair value gap. Again, we're looking for support there. It's good price reading right here. It's good stuff. I'm going to send this update to the group real quick. Now, if I was aiming for a little bit more, that would be a good pyramid entry there. Or when price is dropping down to this fair value gap here, but I'm not interested in adding any more to my position. So remember, we're watching this wick. Okay, this candle open, traded down. Yes, it's trading to the inversion fair value gap, but I'm watching this wick here for support. The bodies, beautiful. The low of this candle open, traded down, tapping the low of the wick. Very small details like that just lets you know you're on side. Did we trade down to midpoint of this inversion fair value gap? Nope. Tap the high of it. Do we get speed above this high? Let's wait and see. you gotta love this stuff, man. That's where trading is the best industry in the world. Nobody can convince me otherwise. There's no other industry like this, man. It doesn't get better than this. And I'm still improving, still studying, looking to get better every day. I'm not content. I've had my first $1,000 day, $1,500 day. Soon I'll have my first $2,000 day, then my first $5,000 day, and then you get your first $10,000 trade. And there's no cap in trading. There's no limit on how much you can make. There's no, who says you can't make 20 grand a trade, 30 grand a trade, 100 grand a month. It's all just relative to your account size. Stay disciplined and just multiply your efforts. Do the same thing every day. Knowing that the markets are algorithmic, there's no better feeling. It doesn't get better than that. All right, so now what do we talk about? This fair value gap, do we want to see that send us lower? No, we want to see it be used as an inversion fair value gap. Same thing with this here. We want to see this be treated as what? A reclaimed bullish fair value gap. So we want to find support here. There's your minor buy side. A little bit more, about one handle till our limit order gets tagged. Absolutely beautiful. There you go. Very nice. Let's go ahead and hurry up and change this before it trips us in. 13 contracts short. Oh, hurry up. Hurry up. There we go. There we go. Good day. Trailing my stop beneath the inversion fair value gap. The low that comes in at 22,059.25. 22,059. So lock in a nice little $60 there. Yes, it's live. And we'll actually go ahead and split these because I do have buy side here. I believe we're looking for that during the stream this morning. And we'll go ahead and peel one off here. Something like that. Very nice. Send it to the group. Let them know where my partials are. I don't live stream the PM session. I live stream every morning session. And we did press buttons every day this week in the AM. But the PM session is kind of just my time to work on my game, if you will. It's kind of my time to just trade without turning on the mic. I'm recording this today, but most times when I'm trading the PM session, I'll be in bed or I'm in the living room on the couch with the, ESPN or something on in the background. That's kind of just my time to trade off camera and just work on pyramiding without, all the extra eyeballs on me. But go ahead and send this to him. Really, really nice low resistance day. Very nice. Watching this fair value gap here, these 3 consecutive down close candles, that is one bullish order block. If we were to trade down into that, you would want to see some sensitivity there. So on my live account, I am up 866 bucks. I want 1,000, so I'm not trying to get cute. I need an extra, what is that? I'm up 866, so I need about 140. Can I lock that in without being too aggressive? Yeah, I need about 140 on these last two micros. Closing there. I'm real confident that's going to hit the buy side there, but my goal for the PM session was to make 1,000, and we got that. All right, and there is the business. This was a lot of fun. For real now, I'm done for the week. This was just, it was too good to pass up. So I'll see you all Discord members in the stream tomorrow at 9:30, and for the rest of the YouTube community, we have our free public tape reading stream Tuesday at 9:30 after our bank holiday. Love y'all. Be safe. Peace.